Let's kickstart the Fatafat segment. I'd like to start off with Infosys, how the brokerages are digesting the numbers and the commentary from the management last evening. Poonam, take it away.
Well, it was a very strong performance coming in from Infosys on almost all counts, and Infosys management has revised the revenue as well as the operating margin guidance for FY21 fairly upwards. In fact, as a result, we're seeing quite a lot of earnings upgrades coming in there, and most of the brokerages, of course, do maintain a buy with a target price of anywhere around 1,150 rupees per share to as high as 1,400 rupees per share. And if you look at Infosys, for quite a few brokerages, Infosys remains their top pick. In fact, Goldman Sachs does state that they're maintaining a buy with a target of 1369 rupees per share. They state that earnings beat is reflecting of three themes: digital technologies, strengthen has led to an upward revision in the guidance. They have gone ahead and increased the earnings estimates by up to 4%, and they see Infosys continuing to trade at premium valuations. BofA also maintains a buy with a target of 1275. They are stating that Infosys is the beneficiary of improving win rates, favorable tech spends, and there's a sharp improvement in profitability. They're valuing the stock now at 25x versus the 22x earlier. JP Morgan, for them, Infosys remains a top pick, and Jefferies also maintains a buy. So yes, on all counts, we're seeing earnings upgrades coming in there, and Infosys is likely to continue to trade at premium valuations.
Okay, that was Infosys, but we have two more Fatafat stocks coming out of the same stable right now, and that's the Tata stable. That counter has really been in focus today, ELXSI and Tata Steel. And I'm going to begin with ELXSI, the automated driving company that competes with KPIT. Revenue from operations 430 crore, up 12% YOY and 7.5% Q on Q. PBT 110 crore, up 56% YOY. PAT at 78 crore, up 49% YOY. And EBITDA at 118 crore with margins of 27%. So that's what's got investors excited about this one. It had run up a lot, but now you have earnings which are justifying the run up. Coming to Tata Steel, this stock was on upper circuit yesterday. It was frozen. Actually, you couldn't buy any shares even if you wanted to. The company, which manufactures steel and allied products, reported a 52% YOY increase in revenue. So 1,100 crores versus just 653 crore. EBITDA 199 crore versus 30 crore loss in the previous quarter. So there's been a sharp turnaround at Tata Steel Long Products. Tremendous jump yesterday. Today also holding out firmly in the green. Tata Stable definitely enjoying the gains this morning.
Moving on to some more stocks that are in focus. Pull up a small cap name, ACRYSIL, that's also locked in the upper circuit, up a solid 10% in trade on the back of some bulk deal action that took place yesterday. Sunil Singhania-led Abacus Asset Manager has bought about 1.5 lakh shares, and the same company's Abacus Emerging Opportunities Fund has also bought 17.2 lakh shares. Who's the seller in this transaction? It's Shock GmbH, which has sold close to 20.3 lakh shares. The transaction has happened at a price of 101.3 rupees a piece. In fact, the stock also, continues in the meanwhile to rally, and how locked at 130 rupees 0.5. Next name that I'd like to pull up is Aurobindo Pharma. Looking comfortably okay today despite the overall weak sentiment in the market. Goldman Sachs has come out with a note on Aurobindo Pharma. They've maintained buy at a target of 1,060 rupees a piece. They believe that Aurobindo has a differentiated pipeline to fuel a next phase of growth. They've raised FY22-23 EPS estimates by up to 5%, and they say that the company has more increasing contribution from more stable generic. They acknowledge company's consistent execution over the past 5-year cycle as well, giving it a thumbs up with a buy rating target at 1,060. Varun.
Okay, and the next one we have today is Green Panel. It's an MDF manufacturer, multiple density fiberboard. Just yesterday, if you were paying attention to exchanges, the anti-dumping duty on MDF has been extended till Jan of FY21 to protect local producers, which would be a Green Panel. So he's going to benefit from that. The stock has also run up nearly 50% in the last 2 weeks or so on the back of channel checks that indicate there's been a significant improvement in revenues and that this is a company that's actually caught up to its pre-COVID level of sales. There's also an iSecurities note which has come out on it with a target price. I believe that's significantly higher than where it's currently trading. So do have a look at that one. That's interesting as well. Back to you, Karunya.
And a final stock that we'd like to pull up is that of Goa Carbon. This one is also doing very, very smartly in trade, up 4.5% as we speak. They delivered their numbers last evening. Good improvements seen, while on the revenue front, they've seen a 15% drop YOY. The losses definitely have sort of reduced quite a bit from a loss of 14 crores in the same quarter last year. This time around, they reported a loss of 5 crore rupees. So yes, the street seems to be celebrating that. And the stock, meanwhile, is trading with a gain of about 10 rupees a piece at 223.5 per share.